So, David, we're going a little bit left of centre on this podcast in talking about cryptocurrency. Let's just kind of delve into crypto and why it's so topical at the moment, I suppose, since Donald Trump's election. Just talk to me really about why you feel that it has surged.
Yeah, Cliona, it's Bitcoin particularly, which is always grabbing the headlines, but cryptocurrencies in general have skyrocketed in recent months, and it's grabbing all the headlines. As I said, like I think today the price of a single Bitcoin is gone over like $95,000. Now to put that in context, if you go back, say, this time 5 years ago, I think it was as low as $7,000
Oh my
per
God.
coin. Yeah. A lot of the uplift was seen this year as well, because there's been, I suppose, a couple of key milestones. If you go back to, I think it was in April this year, the SEC in the US, that's the Securities and Exchange Commission, I think they granted like approval for cryptocurrency ETFs. So basically people could go onto your kind of typical online exchanges or kind of brokerage accounts now and buy ETFs, exchange traded funds, which are kind of made up of cryptocurrencies. And then more notably, I suppose the US presidential election and Donald Trump's victory. Throughout his campaign, he was very, very pro crypto. I think he promised to make the US the Bitcoin superpower of the world, as he put it. So I suppose it's just kind of, a whole host of momentum to kind of make it seemingly a bit more kind of accepted and adopted over time. Trump obviously was, highly supported as well by people like Elon Musk, who is very,
Yes.
very pro crypto as well.
So should we be buying Tesla as well as crypto?
Yeah, Tesla famously invested 1.5 billion in crypto actually in Bitcoin back in 2021. So and that's kind of one big risk of things like Bitcoin and cryptocurrencies, and that they can be manipulated quite easy, just as simple as a tweet from Donald Trump or a tweet from Elon Musk can literally send the price of Bitcoin skyrocketing or massively falling.
So for somebody, let's say, and I know there's been a lot of chat about this recently, there's been loads of articles in the newspaper on, like, should I buy Bitcoin? If you are considering buying a cryptocurrency, is it the one you should buy, or should you go there at all? Is it too volatile?
I think people need to appreciate that Bitcoin, like all cryptocurrencies, are still extremely speculative and volatile asset classes, and the last couple of, I suppose, weeks or months doesn't change that. My advice around Bitcoin and crypto has always been the same, and I don't think it will ever change. It's that if you are going to invest in them, I think you should only be doing it with a portion of money that you're comfortable losing. Some people mightn't agree with that, but I certainly do. And I think if you are going to invest, it should only be a very, very small part of a well-diversified and well-structured portfolio. While I'm not an advocate of people, investing in cryptocurrencies, I believe that there is a responsibility on financial advisors to educate themselves somewhat on cryptocurrencies and educate our clients on the risks of them and how to structure them into a well-balanced portfolio if they do want to go down that route. Like, I've come across a lot of holier than thou financial planners that bury their head in the sand and criticize anytime somebody wants to talk about cryptocurrencies. But I mean, like, it's human nature. You're dealing with an asset class that has gone up so much in value over the last couple of years, so it's human nature to want skin in the game. And I think the more educated we can become on that and advise clients on it, then kind of the better for everyone, essentially.
I mean, I am definitely no expert in cryptocurrency. In fact, a complete novice. But if I wanted to buy it in the morning, how do I go about buying it? And let's say I wanted to take that risk with €5,000. Where do I buy it?
There's various exchanges that you can buy them through. We maybe won't mention any of them here, but I'm sure people are familiar with the most common ones. As I mentioned, most kind of well-known exchanges now, you can buy cryptocurrency ETFs as well. So it can be done quite easily. I mean, look, let's say it. I mean, even kind of well-known online banking platforms like Revolut now, I think not a day goes by or not a week goes by where I don't get something popping up from Revolut asking me, do I want to buy, cryptocurrency?
Yeah.
So it's that easy, and I suppose that's kind of where the risk is coming from as well, that people can, it's so accessible nowadays, and I think people can kind of plow too much into it without getting the rest of their kind of financial planning correct, and doing the more kind of tight tested, proven strategies. I suppose like when we're constructing a portfolio for a client, it's generally going to be a portfolio that will weather any storms over the long term, and that's traditionally a portfolio that's maybe well diversified portfolio of global equities and bonds. And we know that history has shown us for well over 100 years that that type of portfolio will work out for the client once they give it time. Whereas if you think about something like cryptocurrency or Bitcoin, even though it's been around a while, it doesn't have a really long-term track record. As I said, it's very speculative, very volatile. I appreciate stock markets can go up and down as well, but not to the extent as Bitcoin is. And I suppose if you think about stock markets holding a shareholding in a company like Apple, somewhat it's tangible. You can quantify the value of it. You own a tiny piece of one of the world's biggest and most profitable companies. We know it's a very innovative company. We know its profits and revenues are going up and up and up every single year. So we can kind of say that, look, we can see where the value is coming from, and more so if we're holding a portfolio of hundreds of companies like Apple, we know where the value is coming from, and it makes sense from an investment perspective. But I mean, if you ask 10 people what is Bitcoin or what is cryptocurrency, at most I'd say one person would nearly be able to describe it. Where is the value coming from? Is it just this kind of race to the top where everybody is trying to get in and make money off it, or is it eventually going to become a form of payment? If it is going to be a form of payment, how can it be so volatile and be accepted as a form of payment?
And are the other cryptocurrencies increasing like Bitcoin is, or is it just Bitcoin because of Trump?
Yeah, I think it's kind of Bitcoin grabbing all the headlines at the moment. I think people have this theory that when Bitcoin rises, it then starts to settle, and then you see more focus flooding into, I think they're called altcoins, which is the other ones like, let's say Solana, Ethereum. I think many years ago, people were saying that maybe the technology behind like Ethereum was maybe a bit more advanced than Bitcoin, and maybe that would eventually overtake Bitcoin, but it still seems to be Bitcoin grabbing all the headlines. But yeah, I mean, look, I'll profess that I'm not a crypto expert myself either.
And you've many clients that are coming in to look at investing in Bitcoin, or is it really just something that's grabbing the headlines at the moment?
Yeah, I think not most people, but a lot of clients I would speak to, they do hold very small amounts of cryptocurrencies. Myself and obviously Nick, we kind of refer a lot to this kind of, let's say, core investment strategy and then your satellite investment strategy. And the core strategy really is, investing in the well-diversified stuff, the time-tested, proven stuff, having a structured financial planning place to get you where you're going and put most of your focus on that. And then if you want to take a little bit of risk with smaller portions and put them into, cryptocurrencies or Bitcoin or whatever, I'm not, really knocking people doing that once they understand the risks and are comfortable using an amount of money that they're comfortable not comfortable losing, but they're prepared to lose.
In terms of risk profiling, where does cryptocurrency sit on that scale?
Yeah, so like in the regulated world, Cliona, and obviously we are a central bank regulated company, so we don't spend a lot of time speaking about crypto or arranging it at all, because it is mainly kind of an unregulated asset class and something that is very risky. I mean, we can advise people on the kind of pitfalls, and there's a lot of them out there, whether it's kind of scams or I suppose pyramid schemes posing as cryptocurrencies, or just the dangers of investing in crypto itself because it's so volatile. But in the regulated world, all investments or all funds in the European market are usually classified on a risk scale between 1 and 7. It's called the ESMA scale. So usually your higher risk investments, more exposure to kind of global equities, would be closer to a 7. And then lower risk investments, which have a bit more exposure to like government bonds and cash, are closer to 1. Cryptocurrencies are really, in my opinion, off the scale. They're a 10. So
oh, geez, they're off the Richter scale. Yes, so it's not something that you're going to be really looking at putting a lot of money into unless you've got a lot of money to lose. You mentioned there, and we might just finish up on this, scams. There seems to be a lot of scams in the whole kind of cryptocurrency space. What do people need to look out for?
If you are comfortable taking the risk and you're comfortable investing in cryptocurrencies, I would use well-known, reputable exchanges, like maybe the ones that we've touched on earlier, and just make sure that it is legitimate, that you're not receiving, any emails or texts asking you to click on a link, that when you go on to an exchange, let's say it's Revolut, that it is actually Revolut, that, you know, look at maybe the website, that it's not actually on something else posing to be Revolut, and just always ask yourself the question, you know, is this legit, or I suppose is it, you know, just verify it basically, you know.
Well, I think you always need to be really kind of conscious of putting money, you know, anywhere really at the moment. And I suppose with all kind of social media and everything like that, there are a lot of pop-ups that are coming up. So the thing is just to be cautious really, I suppose.
Yeah, no, 100%.
Very good. So thanks a million, David. It's great to chat to you today.
Yeah, absolutely. Thank you, Jim.